This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel. Morning, guys.
Hi, morning. It's a Tuesday morning, but I'm getting this Friday feeling, right?
It is a Friday feeling, but there's some confusion about the holiday, Nigel, right? I mean, you were saying, Nimesh was pointing out that maybe the holiday moves from Wednesday to Thursday. I don't want to...
Oh, is it? We haven't got any official communication, but, schools and all actually are shut on Thursday.
Across India, everyone's celebrating Bakri Eid on Thursday. It's just that the market calendar and the holidays were decided at the beginning of the year, and they decided to give it on Wednesday. And the same thing happened, remember, on Holi also? Mumbai celebrated Holi on another day, while rest of India celebrated, I think, a day later or a day earlier.
I'm hoping it doesn't move. I've got a plan this evening, so it'll have to get cancelled.
And given the way the monsoon's progress, is I think perfect to just sit at home and enjoy your cup of tea in the morning.
As we start a lengthy day, right? I mean, anyway, I mean, let's just quickly tell you what you need to know as we begin another trading session, a new session this morning. So it's not all bad from where we left off yesterday, but it's not very positive from where we will pick up from overnight. So the Nifty yesterday once again successfully defended the 20-day moving average. And this is a level which is important from short-term, medium-term kind of reversal point of view. We got to it, defended it, and then closed above it. Friday, for example, we closed about 2 or 3 points above it, and yesterday was a bit more not decisive, but a bit better. We ended about 20, 25 points up on the day. I'll get back to levels in a bit, but overnight, things are looking a little weakish. So S&P is down 0.5%, the Nasdaq is down about 1.16%. The broader market, the Russell, is actually outperformed, but it's flat. I mean, but slightly higher. That's a small cap part of the market out there in the US. We were talking about, and by the way, where did the pressure in the US come from? Those 7 names. We were talking about S&P 493 being flat for the year and the rest of the 7 large cap tech stocks being up massively, some 50-55%. That's where the pressure is starting to appear over the last couple of days. So, keep an eye out on that. But it's an extremely peculiar kind of market in the US because the rally's been driven by these 7 names. And now, I mean, a little bit of the pullback is also being driven by these 7 names. So how do you read it? That's the big kind of talking point. Now, with the Nifty yesterday defending the 20-day moving average successfully, the question is, do we start, right away a up move or will we kind of consolidate a little bit more? And I think the way the market moves from here will tell you a lot about what it wants to do. Even when we were at the all-time highs, it was a very feeble, weakish kind of move higher, very indecisive. There was no flourish, no momentum. I think momentum is the most important thing, which was missing even as we got to within that 1 point of the all-time high. So I think watch for price signals in terms of how the market behaves whether with momentum or without momentum, and I think that will give you the answer. But I think you can correlate that with levels as well. So the 61.8% reach, okay, let me just get to the lows first. The low yesterday was 18,646. First, there is the 20-day moving average. And then the low yesterday, which is 18,646, has to be defended. I think that becomes a bit of a short-term support level, which the market must not break below. On the upside, the fall from almost the all-time high to yesterday's low, the 61.8% retracement stands at 18,794, almost 18,800 or so. And I think that becomes the level on the upside to take out if momentum starts to come back into this market. Bank Nifty traded sideways yesterday, not very much by way of cues, but it's also not broken its 40-day exponential moving average. It's broken the 20-day, but not the 40-day. So that level for the Bank Nifty is 43,511. And if that goes roughly, it's not exactly 43,000, but for all practical purposes, it is. Those are the 2 support levels on the downside. We closed at 43,600 plus. In trade yesterday. On the way up, the recent high of 44,042 becomes important to take out, which of course we've been putting out for a while. Strong momentum in broader markets yesterday, and I think that has to be said because last week mid caps and small caps looked a little shaky, a little wobbly. They were down about 1.5% for the week, and yesterday they were up 0.9 and 0.6%. A lot of action in the broader markets, which I think When Nifty is down or sideways and broader markets doing what they are, it doesn't feel like the market is not doing anything or it is quiet. I mean, it's still, you would be qualified to be called a vibrant kind of market. And that's the kind of session that we had yesterday. 18,735, once again, a more or less flattish kind of start is what the SGX is indicating that we will open with. Rima.
Hi. So the SGX Nifty is flat. The Asian markets are mixed today. So Hang Seng has rebounded after 5 days of losses. The Hang Seng index is up 1.5%. But Nikkei continues to see profit booking after the sparkling rally that it's had over the last couple of months. The Japanese index is currently down close to about 0.8%. For our own market, today is the penultimate day for June series trading. So if you want to trade the expiry, today is actually T-1. In terms of the June series performance, it's been fantastic. The benchmark index is up 2%. The mid-cap index is up 6%. The small-cap index has rallied 7.5% so far in the June series. We've also got the Fin Nifty expiry, considering it's a Tuesday. Large blocks in secondary market sales continue. So today you've got an Aditya Birla QIP and about a 30 lakh share sale in Sapphire Foods. In terms of primary market action, Idea Forge, which opened yesterday, remember the drone manufacturing company with a 50% market share, solid subscription of 3.7 times on day one, largely coming in from retail and the H&I book. The QIB portion was subscribed about 1 time. And you also have Cyient DLM. It's a subsidiary of the IT company Cyient, but this is an electronic manufacturing company which gets more than 50% of its revenues from aerospace and defense. So EMS, aerospace, defense, all the words that the market's currently like, and this IPO will be opening up for subscription today.
Well, Rima, yesterday in the latter half of trade, we did see a bump up from the day's low. I remember closing well, we more or less flattish, but we ended closer around the 18,700 odd mark. But the most heartening fact about yesterday was the mid-cap and the small-cap indices, after a few days of a bit of a lull, they made a comeback in yesterday's trading session. So there was outperformance from the broader markets. I like that, and that should be a focus area as well. The cash market volumes, well, the DIs, some of them seem to have gone on a vacation because of the truncated week, maybe. Because the volumes yesterday, the participation was 20% lower than the average that we've seen in June 2023 so far. What are the FIs doing in the F&O market? Well, they added some mild longs. The country remained net long on the index. They bought more calls than puts, while they wrote equivalent amount of calls as well as puts, which brings us to the levels. Now, the Nifty Bank took support at around the 50 DMA, so you're banking on that holding that 43,450 to around 43,500 odd mark. The Nifty, well, we have expiry, the monthly expiry that will play out in the next few days. And for now, the positioning is such that 18,575, beg your pardon, is your support level, while on the upside, you have 18,800 as a bit of a resistance zone. So that's the broad level you're looking at. And I say that because you're looking at the options data, 18,750 call, 18,600 put. Well, both of them were very active in yesterday's trading session. The levels you're looking at, 20 DMA, yes, on the downside, but even if that breaches, the last few days, the Nifty has bounced off this 18,647 odd mark. So that's going to be a line in the sand. That's the important mark you're looking at. The second half of trade will belong to the Nifty Financial Services Index, because you have the weekly expiry that will play out. And the broad range that you're looking at, going by the options data, is around 19,460 on the downside, while on the upside, you're looking at around 19,590 odd, because the two most active options with a fair bit of open interest are up for you on the screen. That's 19,550 call, as well as the 19,500 put. Now, the SGX Nifty is suggesting a 30-35 point bump up. I think at some point of time, you get an intraday dip, or maybe initially itself, you get the intraday dip. So don't chase the open. But if you get the intraday dip, maybe you look to buy the index, and also you keep a stop loss at around that 18,647. Because that's the mark from where we have bounced the last few sessions.
Well, so that's basically the setup as you need to know it. 18,736. It's a flattish kind of higher, but more or less, quite kind of open that we will get this morning. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets around the globe. Arvind Sanger is going to be joining us at Geosphere Capital Management. We'll discuss the global sort of setup and scene with him. Our research team gets you the top 10 stocks for the day that you need to watch out for, and Nishchal Maheshwari will talk fundamentals and stocks and sectors and themes that he's watching out for a little later after that.
On equities then, Rhythm Desai of Morgan Stanley says peaking short-term rates, improving trade and earning strength appears to offer a better setup for stocks. That said, sources of volatility include India's election cycle, weather, global growth, geopolitics, energy prices, and global liquidity. India is up 9% in both absolute and relative terms in USD terms in Q2 so far. While relative valuations remain rich and India's low beta status implies it underperforms an EM bull market, India offers much stronger relative earnings growth and is likely to benefit from a trough in terms of the real gap with the US.
Okay, well, that's basically the view coming in on equities. But on the rupee, Abhishek Goenka of IFA Global says the low volatility phase and the dollar-rupee pair continues. Extremely narrow ranges are being traded in spot. Intraday, the central bank has been mopping up dollars aggressively around the 81.9 to a dollar level, thereby putting a firm floor. He expects the dollar-rupee pair to trade between 81.6 to 82.9 to the dollar over the coming few weeks, with the downside break eventually likely in line with their view of a weaker dollar.
On the bonds then, Ajay Magnolia of JM Financial says in the absence of any fresh triggers, domestic markets are trading in a thin band. Fresh conflict in Russia-Ukraine can have some impact on yields. Liquidity remains in surplus. State elections later today can expect good bidding. He expects the 10-year benchmark yield to trade in a range of 7.04 to 7.08%.
All right, well, we have a lot of stock-specific action to track for you. We get to that in just a wee bit from now, but let's run you through the list for the time being. We're looking at AB Capital, Sapphire Food, Parag Milk Foods, BLS Internationals, Axis Gates Tech, Naveen Flodin, and City Union Bank. Their stocks on the back of positive news flow that you've seen. And you have Avas Finances, Rolex Rings, and ICICI Prudential. They could be reacting to negative news flow.